Right, good morning everybody. I would like to extend a warm welcome to all the members of the Audit Committee, other members of the Council and officers in attendance at today's meeting. Welcome to members of the public and press who may be watching the meeting live on YouTube. I'm Councillor Alan O'Sullivan, Chairman of the Audit Committee. Please note that this meeting is being broadcast live and will be available for repeated viewing. Please all councillors follow the Council's ground rules for virtual meetings, which has been well circulated. In particular, please use the conversation panel to indicate any request to speak, and only speak when invited to do so by me, the Chairman. I will be taking recommendations by consensus at this meeting, but if a vote is required on a particular item, I will call each committee member to vote in turn. In the event of any technical problems, there will be a short adjournment to establish that the fault can be addressed. Please bear with us in these circumstances. If an individual loses connection and the meeting can practically continue with a quorum, it will do so. For the benefit of all participants and those viewing the meeting, I will now call the name of each committee member and ask them to identify themselves as being in attendance at this meeting. As I previously mentioned, I am Councillor Alan O'Sullivan, Chairman of the Audit Committee. Councillor Alvey?
Yeah, present, Chairman.
Councillor Brand?
Present, Chairman.
Councillor Kangarani?
Present, Chair.
Councillor Lane? Councillor Lane? Councillor Levitt?
Present, Chairman.
And Councillor Sevier, his apologies, and Councillor Ward. Thank you, members. If it's okay, I'll just ask officers to introduce themselves when it's their items arising. Right, do you have any apologies for this meeting today?
Apologies from Councillor Anne Sevier, Chairman.
Okay. Item 1 on the agenda is, can we confirm the minutes of the last meeting?
Agreed.
Thank you.
Agreed, yeah.
Item 2 is any declarations of interest relating to anything that's on the agenda today? No, I'll take that as okay. Public participation. I think we have any particular. So let's get straight on to the meeting business. And item 4, which is the audit results report. Kevin?
I'm going to let James introduce this one, Chairman.
There we go. Sorry, just on mute. So yeah, hi everyone. I'm James, the Audit Manager, and we're pleased to present to the Audit Committee our audit results report. I will take the contents of the report as being read, but I'd like to take you through a summary of the work and findings and then take any questions that you have at the end.
Okay.
So to start with, I'd like to take you through the changes to our audit plan, which is on page 9 of your reporting packs. And there's a table in there that just takes you through the changes to our risk assessment as a result of COVID-19. And so what we had to do when we returned at year end was to reconsider the risks that were present in the audit, and we had to increase a certain number of risks as is shown in the table. So just to run you through these, firstly we had to increase the risk to a significant risk for our valuation of property, plant and equipment and investment property.
Sorry, Mr. Chairman, I'm reading page 9, it's executive summary. Scope update.
Summary, that's correct.
Yes, that is correct. Yeah, it's a table within that. It should say changes to our risk assessment as a result of COVID-19 as the heading.
Okay, thank you. Sorry, I thought I was missing something.
That's fine. So yes, the increase of risk for the valuation of property, plant and equipment and investment property. So following COVID-19, the Royal Institute of Chartered Surveyors, RICS, they set out guidance to all valuers highlighting that there is a material uncertainty for their valuations following COVID-19 due to the markets and unavailable data at year end that would usually be available. So a draft caveat was essentially sent around to valuers for this material valuation uncertainty, and this has been included in the accounts. So following this, we had to consider how we were going to audit these valuations, and concluded that we needed to involve our EY real estates team and increase the risk of property, plant and equipment to significant. So we sent a sample of valuations over to the EY real estates team for them to consider. Further to this, we also had an increased risk of going concern. So as the budgets and medium-term financial plans needed to be updated following COVID-19 impacts, we had to consider the unpredictability of the current environment, and there would be an additional risk that the council would not appropriately disclose key factors in relation to going concern. So we had to perform additional work in this area. And similar with events after the balance sheet date as well being disclosed properly. Finally, we also had a risk around the adoption of IFRS 16 in our audit plan, but this has now been dropped as a risk as the application of IFRS 16 has been deferred until April 1st, 2021. We considered changes in our materiality and concluded that we were able to maintain our percentages. So it would be 2% of gross revenue expenditure as being our overall materiality, and at 75% of this figure as our materiality for the audit, which is £1.79 billion. So if we move you on to page 10 of the audit, of the reporting pack, sorry. And just wanted to show you the status of the audit as it currently is. We sent this report to you on the 13th of October, so the list that you see is now slightly outdated, so I just wanted to update you on the details that are still presently ongoing, and therefore items that have been completed are now off this list. So firstly, there was a receipt and review of the EY Real Estate's report, which we actually received yesterday. And so we're able to tell you that they have completed their report and have found no issues in the valuations work that has been performed, and therefore we're not expecting any adjustments to be made. So the report was received yesterday, and I've had a look through it, but I need to do an in-depth review and just confirm there are no changes, but I am expecting there to be no issues with that report, which is good news. We are awaiting a cash flow report in relation to the going concern assessment. So the second item there was completion of review and client assessment of going concern. We've had a very in-depth assessment from the client in relation to going concern, and we have no issues so far. What we're just looking for is a final cash flow forecast, which extends 12 months from the audit signing date for our records, and then I believe that should be able to shut down that final query. And the only two items remaining are the completion of the subsequent events review, which has to be performed as close to the signing date as possible, and also the receipt of the signed management representation letter, again, would be received close to the signing date. So always expect it to be ongoing as at today's date. And those are the only items outstanding. So the list is, yes, greatly reduced, which is good. If I take you now to page 14 of the reporting pack, this is where it runs you through the significant risks and other risk areas. So first of all, on page 14, we have the risk of fraud and revenue recognition. And as noted in our audit plan, we had to consider where this would apply over the audit, and considered it would be right to apply it to inappropriate capitalisation of revenue expenditure. So this meant we had to select a sample of PPE additions and REFCUS items and test those and consider whether they are right to be capitalised, and then also perform some journals testing to confirm that the items that are PPE additions and REFCUS items are flowing correctly from revenue expenditure, and there's no issues arising from our general assessing. And our conclusions in this area are that there are no issues. We haven't found anything of note to raise to the committee. The following page goes through misstatements due to fraud or error. Again, this was an item in our audit plan. And we have no issues to report here. We have not identified any material weaknesses in controls or evidence that there's material management override. Obviously, at the moment, our audit is ongoing, but we do not expect there to be changes in this area. Moving on to the next page, this is valuation of property, plant and equipment, including investment property. So yes, already raised as being an item we increased for COVID-19. And I just wanted to raise here, as noted previously, the areas that said what are our conclusions, we said the work in the area is ongoing and we await the EY Real Estate's team report. So the update here for you is that we have received this report and we expect there to be no issues. We are satisfied with the disclosures in the accounts in relation to PPE. And we worked with the finance team during our interim to ensure that they had revalued a sufficiently high value asset coverage, as we consider that not to be the case at interim. Moving down again to going concern on the next page, another item for COVID-19. We've mentioned here that work in this area remains ongoing, and as I've mentioned, there's a decent amount of evidence that's been provided to us from management, but we're just awaiting that cash flow forecast. And finally, we have pension liability valuation as an other risk. And we had this in at planning as a risk, and there's been no changes there. We've performed our testing and we've identified no material misstatements. I'll take you through in a minute our summary of audit differences, which does include a difference in there, but it is below our materiality level. So we haven't asked the council to adjust for this. We further had to perform events after the year end in relation to the McLeod consultation and the Goodwin judgment, and we've considered that these items do not have a material impact on pension liability and therefore do not require disclosure in the accounts. So if I do take you on now to the audit differences page, which is on page 24 of your reporting packs. So I think a little bit of the way down. And here we do highlight the summary of adjusted and unadjusted audit differences. So we have to identify to you any misstatements greater than our materiality of 1.84 million, which have been corrected, and there's been no misstatements that are greater than this figure. We do also have to report to you any uncorrected misstatements greater than our nominal value, which is 5% of the gross revenue expenditure, the 2% PM planning materiality that we've had, which is 0.12 million. And there's one uncorrected misstatement in this area, which is following the IS 19 report that was provided to us, the Hampshire Pension Fund audit team have gone over the pension assets figure and have confirmed that there is a slight overstatement in the pension assets of 901k. And this is an overstatement. So the pension fund auditors identified the actuary has estimated the New Forest District Council share of the pension fund net assets at the 31st of March to be 177.1 million. And this is 901k more than the value we've calculated for the New Forest District Council's share of the pension net assets. As it isn't of materiality, we haven't asked this to be corrected, and we can still consider the balance to be materially fairly stated. Based on these findings, we expect to issue an unqualified audit opinion and no matters to report about your arrangements to secure economy, efficiency and effectiveness in your use of resources for the VFM conclusion. The audit, as I mentioned, is still ongoing, but based on the remaining items that are outstanding, we do not believe this will change. Finally, I wanted to bring to your attention the audit fee on page 32. And this shows that our current known audit fee is £43,522. This is slightly higher than at planning due to an additional scale fee variation of £801. which has been submitted for the IS 19 protocol assurance provided by the Hampshire Pension Fund auditors. We also wanted to raise to you that there will be additional fees in relation to the additional risks that have been raised following COVID-19 and the subsequent work that has been required, and which includes engaging EY Real Estates. We will hold discussions with officers regarding the additional fee and the work required in relation to COVID-19. This has not been concluded as yet, so we couldn't put a figure in the accounts. We also wanted to bring to your attention the additional conversations that are going on with the PSAA around fee arrangements, and these discussions are still ongoing. Kevin may be able to provide more information on this.
Yes, thanks, James. So we're having ongoing discussions with the PSAA as they've asked us to, as part of their scale fee reviews, to reconsider and work with management to make sure that fees are appropriately reflective of risks in the conduct of the audit. And this is borne out as well by the Redmer review, if anybody has seen that recent review, that the fees and the risk have got divorced over the years, and they're not really reflective anymore of the work we actually had to undertake. So we've been having an ongoing conversation with Alan and his equivalent officers in other organisations and jointly with the PSAA. We haven't managed to reach a conclusion at the moment, but we still intend to pursue that. If we can reach agreement, that would be great. But if not, we will then have to get PSAA to decide what would be an appropriate scale fee rebasing to make sure that risk is fully aligned with the work. So that's the end of our presentation of the report today, and happy to take any further questions that you may have.
If I could stop you there, Kevin, because I've got 2 or 3 people who would like to ask. The first one is Martin. Martin, you there?
Sorry, I just got my message in. So just on 18 of the our page
You're breaking up, Martin.
18. I don't know. Can you hear me? Can you hear me? Oh, freaking hell! Can you hear me at all?
We can hear you now, Martin. Yep.
Can you? Right. Sorry. Page 18, pension liability valuation. You say here the reasonableness of the underlying assumptions used by the council's expert, Aon Hewitt. Can I just ask, excuse my naivety, but who is Aon Hewitt? Are they employed by the NFDC or are they employed by Hampshire County Council? And how long have they been involved?
Yeah, so they are the pension fund actuary. Mm-hmm. I'm not sure how long they've been involved. Kevin might know more. It's certainly been as long as I've been involved in the audit, so several years. And they are responsible for performing the IS 19 reports that are sent to NFDC.
So they're employed by the HCC, yeah?
Yes, that's right.
Yeah, okay, thank you. Sorry. Thank you.
Thank you, Van. Alan?
Thank you. Yeah, it's a general question that, in fact, I raised, I think, in the last audit meeting when E&Y weren't present. And it's really, you in your audit report, you talk about getting a check done on property and plant valuations. And I just wondered, what evidence do you get to satisfy yourselves as to the existence of financial assets?
So for the financial assets, are we talking about property, plant and equipment here? If so, we're
not. We're talking about financial assets.
So we're talking about investments. So we send third-party confirmation requests to the counterparties, and they then send back letters to us confirming the balances, which we have done so for all investments.
Okay, thank you.
Matt?
Yes, good morning. And actually, my question, maybe clarification from my understanding, is the question on page 9, which relate to property, plant and equipment and investment property, which you thought is going to be affected by COVID. I think the consequence, it was shown that there was no risk. I was just wondering sort of how you just extra work.
So by increasing our audit plan to a significant risk, we have to reduce the testing thresholds, and therefore we have to test an increased number of assets. And we do this by agreeing essentially to third-party information for valuations and considering whether what's been in the expert valuer's report is reasonable. In addition to this, so that's performed by the local team. In addition to this, we selected a number of assets that are representative of the overall population and sent those over to our EY real estate team, who are expert risk valuers. And they then performed a review of these assets using their own data that they have available to them and considered whether there's any differences from their asset valuations compared to what your NFDC valuer has, and where they then come up with a range of reasonable values. And from the report that was sent to us yesterday, they have concluded that all asset valuations in the sample are within the reasonable ranges.
But I do understand. That was my question, because I don't think how the property, plant and equipment going to be affected, their value going to be affected by the pandemic. It's just, I don't understand that relationship really.
So this links back to the material uncertainty that the RICS have said needs to be issued to valuation reports by valuers when they're providing reports as at the balance sheet date. So it recognises the fact that in normal circumstances, a proportion of assets that are not specialised would be valued by reference to market data. In the COVID environment, when the UK went into lockdown as of roughly the 23rd of March, I believe, that market data ceased. So there wasn't market data available to make those comparisons. So what we needed to do was ensure that the valuer had done, basically the best they could with the available evidence, and given that level of uncertainty, was it still, the judgment made, still reasonable? So that's how it's been affected.
Thank you. Thank you.
Thank you. Is there no other question? I just wondered what your take is on the Redmond report. Things like taking in, well, apart from fees, taking in internal audits report towards your external audit reports, for instance.
So we do take into account internal audits work in our work. So case of we pay no attention to it at all. It's a very important source of information for us, both on the control environment and for our value for money responsibilities. So we're happy because we do believe we're already doing that. On a wider basis, I think there's a lot of sensible suggestion within the Redmond report. For example, bringing the regime back together so you have a single body responsible for, setting the standards rather than how it's all been split up at the moment. But as we understand, the report is now with MHCLG for consideration. So, we don't have a clear view at the moment how and when it will be taken forward, and we very much look forward to seeing that and being involved in that process.
Might get hidden in the mirror somewhere. Right, thank you. Thank you very much, James, for that.
Thank you.
Okay, everybody happy to note that? And I presume the management representation letter, everybody's happy for me to sign that. Good, thank you. Let's move on to final annual government statement, which is, I think, yours, Alan.
Yeah, thank you, Chairman. Good morning, members. Yes, I'll keep this brief. Essentially, the annual government statement presented now as the final version is unchanged from the draft that was presented previously back in July. Obviously, we do reflect on the statement between July and today's date. I think realistically, the only thing I could have updated in there was the fact that the task and finish process had moved from essentially task and finish had now finished. And obviously we had adopted the revised emergency budget in September. However, I didn't really feel it was necessary to reflect that in this AGS and obviously that gives me something to include in the 2021 annual governance statement instead. So yes, Chairman, so as I say, no changes from the previous draft, so not much more I can say on it really.
Okay. Now are we all happy to agree to the statement? We've all had it before, we've all had a chance to read it.
Yeah, agreed.
No dissent. Right, we'll move on to item 6. Oh, by the way, I did note you, Emma, that you were there. Item 6, final annual financial report. You again, Alan.
Okay, thank you, Chairman. This is normally the point where I ask everyone to lock the doors because we're here for we're here for a while. But I'm not intending to go through, obviously, in masses of detail. Instead, I think it's just nice. It's nice to note that the narrative statement really at the front of the report does give that nice snapshot really of the financial performance seen during 1920. And even so, a lot of that information would have already been reported through the annual performance report that went through the overview and scrutiny panels in June, and then on to Cabinet in July. And obviously, as James has mentioned, within the audit, we've had to make no material differences within the accounts between that period. I mean, one area I will just touch on, again, for the purposes of openness and transparency, was there is a slight issue, I think, in the accounts for 1920, in that the overspend is obviously a fairly unique situation. We typically have had underspends previously in previous financial years. Obviously, one of the main areas of concern in there really is the costs of homelessness. You know, we have seen that increase as a result of the new Homelessness Reduction Act from 2017. So unfortunately, our spend has gone up in that area, and it has gone up beyond the value of the new burdens grants that we actually get from central government. So again, just to make sure we are keeping control of that area, I have been meeting on a bi-monthly basis with Grania and Richard Knott as the service manager. So we are keeping a very close eye and very close control on that area. And obviously, as part of the council's strategy to invest in more council dwellings, again, we have actually completed on some new temporary accommodation in the meantime, in any case. So again, our overall goal is to place less reliance on emergency and expensive bed and breakfast provision, and move towards putting those in need into our own owned accommodation. And so again, that's an ongoing piece of work. Another important area, I think, in the accounts, and especially prevalent now, is the level of reserves held. So page 70 of the reports back confirms that our usable reserves stood at just short of 48 million to the year ending 31st of March 20. Now this is a reduction of just over 7 million from the previous year. However, as I've just mentioned, the council has got a live strategy to invest further in council-owned dwellings. So we did spend just over £10 million last year in the capital programme. And obviously those acquisitions are funded in part by reserves. And also the council has its live strategy to invest in commercial property for the purposes of income generation and economic regeneration within the area. And again, the £4.5 million that we spent last year on commercial acquisitions, again, that is funded by the council's reserves. So when you take those two things into account, there's no surprise, therefore, that our value of reserves has reduced. But again, those are planned strategies with the planned financing mechanism utilising our reserves. Chairman, as far as I'm concerned, there's nothing out of the ordinary in our accounts. Instead, the accounts for me still demonstrate that we have a very strong balance sheet. We have adequate levels of reserves, which ideally gives us a solid base to work from as we look to continue to invest in key services that we deliver to our residents within the New Forest. And again, pleased to see that obviously no negative observations in terms of how we deliver this in terms of value for money. Chairman, just finally, obviously I'm observing that the accounts presented are marked as final, and as James touched on, there are still a couple of areas outstanding in terms of the audit work that we're going through. So my suggestion at this time is that we don't actually sign the accounts today, just in case there are some further minor adjustments that are needed within the accounts. So Chairman, what I'd like to propose is that you and we will simply agree to essentially meet on another date to sign the document at the appropriate time upon the very final completion of the audit, which will obviously be before the 30th of November statutory deadline. So, Chairman, I wasn't intending to say much more, but obviously happy to take any questions.
Obviously, with this COVID that we've had, you've had a tremendous time over the last few months revising budgets, putting things forward. So it's been a very trying time.
It certainly has.
I'm surprised you're still standing, really. But I've got a couple of questions from Martin.
Oh, okay. Thank you, Chairman. First of all, Alan, I have got queries about the net pensions liability and the pensions reserve offsetting in the bank. I don't fully understand that. So I'm sure the Chairman doesn't want me to ask the question, but can I possibly just have a 10-minute conversation with you on another day, if that's all right with you? But I do have 3 or 4 little pedantic questions I'd just like to ask, if I may. Just the first one. Hopefully they won't be too painful. Just on page 76 of, I'm referring to the page numbers we've got for the 211 pages. Page 76, most employees of the council are members of the local government pension scheme. Can I just ask, how long do new employees wait to join the local government pension scheme? Because it just refers to most employees in the report. I'm just intrigued.
Well, at the moment in time, it's actually automatic enrolment. So every new starter is automatically enrolled in the pension scheme, and it's down to the employee to essentially unenroll themselves, if you like, to withdraw.
Oh, okay, I understand. Thank you very much. That's only the first question. And the second question is, hold on. Oh, yeah. On page 93, again, I spent about an hour on this. I couldn't. You notes the accounts, expenditure and income analysis. You go through, and you've got movement of the provision of service. I presume that's the cost of services, and the movement through the year is 11 million. And 22 it's shown on the report, and yet when I looked at the income and expenditure statement, page 68, the net movement seemed to be 8 million. Again, I'll go through that again separately, but unless there's something easy to note there.
Sorry, Kaz, I think you probably have to give me a little bit of time to fully understand.
No, okay.
Different notes do slightly different things within the accounts. So, yeah, I can't give you an instant.
No. I entirely understand. Go to page 106 on the report. This is the most important thing I just need to understand. On the impairments, how can we have valuation reductions of council dwellings of £4.906 million, and in the same year have valuation increases of council dwellings of 11,702,000? I just was really fundamentally intrigued as to how we reached that situation.
One, for example, I mean, the 4.9 million in terms of valuation reductions, for example.
Yeah.
On the balance sheet last year, we had some developments that we were actually building ourselves.
Oh, okay, right.
They were held at full value, so assets under construction.
Right, okay.
Now, as soon as those properties complete and essentially become tenanted, they become at that point a social property.
Right.
But at that point, we have to reduce the value in the balance sheet down to 34%.
Right.
So straight away, we've had an asset that was previously held at 100%, becomes brought into use. We have to basically write off 66% of that value.
So that's
there could be a reduction.
Yeah, that's the 4.9 million you're talking about there.
That would be the main reason behind the 4.9 million.
Okay,
yeah.
Right. Okay. Well, thank you very much for that.
Okay.
I think that's the list of my boring questions, but I have got a few other little pedantic things I'd like to go through with you. But anyway, Thank you very much.
Thank you, Martin. Alan.
Yeah, thank you. Well, first of all, I mean, I think it's an amazing document to put together and go through. But the first question I had, I think, was probably the same as Martin's, which is on this pension liability, the 99.47 million. Now, I hope it's a simple answer, but it seems to me that it covers future employee contributions, and I don't understand why we need to report on that basis unless it's an accounting requirement. Is there a quick answer to that?
Only that essentially, if the council were essentially to wind up tomorrow, we would still have a liability for those employees who are paying into the scheme to fulfil their pension obligations. So we have no choice but to include the complete value of the liability on our balance sheet.
But if the council folded up, the staff would be made redundant and we would not have to pay future pension contributions for the rest of their working life.
No, I think we have a statutory obligation for certain employees, obviously, if they're in that pensionable age. I'm sorry, Councillor Albie, I think it's a detailed one. I think I'd probably need to pick that up.
I'll contact you separately. The next question I had, you answered in your introduction, so I won't raise that. The next one was a small item on the CalShop where the cost is shown as 74,000. I mean, was that because we owned the land and therefore there was no cost of land purchase? Is that right? Sorry, Alan, I can't hear you.
No, I can't hear you, Alan. No, still can't hear you.
You're muted, Alan.
No, how about now? Yeah, I'm coming on and off.
I don't blame you.
Know the feeling well.
So yeah, sorry, Councillor, you actually broke up halfway through that question, my end as well.
Oh, I see. I got cut off. Well, it was a very minor one. It was just a question on the CalShop cemetery, which in the accounts is shown as a cost of 74,000. And I find, there must be a more cost than that. I just wondered why it's only 74,000.
Again, sorry, where is the 74,000 referred to? Just for that context.
Oh, I'll have to come back to you on it. Sorry, I've noted them all apart. I haven't got a note of that particular page number. I'm sorry. It's in the assets.
Now, perhaps you'd do that afterwards.
Yeah, I'll do that. I'm sorry. Right, my next question is on developer contributions. I just want confirmation that we're actually holding as developer contribution 9.4 million. And I wondered that obviously is something that we should be spending on the infrastructure for the community. I wondered what the programme was for that.
Yeah, so this is an item that's been previously raised. What I've asked Claire Upton Brown to do this year is to set out the programme for 2021 and present that through to the community overview scrutiny panel. And then what I'm going to ask is for some interim reporting to that same panel, because like you, I'm very keen on obviously seeing a programme be drawn up and delivered. It's not right that we sit on these funds for longer than we need to. So yeah, that's something that's going to be going through that panel this year.
Okay, thank you. The last point, I think again you touched on it, but there are a number of statements basically where you prematurely, I feel, you confirm that these accounts were approved by members on the 23rd of October before we'd even discussed the item. So I was pleased when you said you were going to take that back and discuss it later with the chairman. So thank you.
Thank you. Matt?
That's maybe a naive question. I'm talking about the total reserve, 273 million. It's not actual cash in a bank, is it? Sorry about that.
No, that's okay. So again, if I refer again to note, I think it's page 70, isn't it? That gives the movement of reserve statement.
Yeah.
What that does there, it gives us a value of usable reserves, which is the 47 million figure that I referred to in my overview. We then have the unusable reserves, i.e. the non-cash reserves, in essence, that reflect the timing differences in some of our asset revaluations. So they're only really cash reserves that would be realised if we were to sell the majority of our balance sheet assets, in essence.
How much cash do we have in the bank as a reserve?
Cash in the bank is visible on the balance sheet. Bear with me. If I can find it. Lisa, if you get there first, please feel free to shout.
The cash on the balance sheet at that time was
18.5.
Yeah, 18.5. Yes.
How much is that? So 81.
18.5 million.
Yeah.
As at 31st of March.
Obviously, we spend lots of this money on contingency, COVID-related issue, and the grant for the businesses. Is that money still there? I just wonder how much was then and how much is now.
Well, again, I haven't got a cash balance as at today's date, but I think what I can confirm in the emergency budget that was obviously prepared and produced for September, what that actually demonstrated to us is that we haven't had to use our reserves at all in order to rebalance that September budget. And obviously the grants that went out to businesses, that wasn't our money, that was money that we were given by central government. So that's had no implication to us.
Does they, sorry, but just the final point, you know, we had some seawalls breaking down the south coast. Some money had to go towards that. That is not included in that report at the moment. It's over $1 million, I think.
Yeah, so again, the seawall Milford, again, it was an emergency requirement to spend money down there up front. So as you know, there was the 1.5 million initially. So yes, had no third-party external funding been provided for, that would have come from our capital programme reserve. But obviously at the moment we've had £600,000 approved from the RFCC, and we're obviously looking to put in another bid to the so again, that money will come back.
All right, thank you for that. Thank you.
Thank you, Matt. Right, as there's no more questions, thank you very much, Alan. I'd like to thank, on behalf of the Audit Committee, thank the finance team for all the work they've done this year and how much hard work it has been, very trying circumstances.
Yeah, thank you. I shall pass that on to the team, Chairman. As you say, I think they've done a wonderful job again this year.
Yeah, agree.
Thank you, Chairman.
Right, so we agree on the financial report. No.
Chairman, can we just agree that there'll be a delegation to Alan and yourself to just sign the accounts off, subject to some final changes?
Okay. Everybody agree for that?
Agree.
Right. Thank you.
Thank you.
Thank you, Alan. Let's move on to item 7, which is the internal audit progress report, which is Anthony and Liz.
Thank you. Good morning, Chairman. Good morning, members. I'm joined by Liz this morning, who's taken over as the day-to-day audit manager for New Forest. Liz won't be running through the papers today, but she'll be doing so in future committees. So the first report I'm going to go through with you this morning gives our progress in delivering the 2021 audit plan up to the end of September. Now, the progress report has changed slightly from the versions that you've received previously. And what I'll do, I'll just talk you through some of those changes. The actual sort of look and feel of the report's changed slightly in order to meet accessibility requirement legislation changes. But the actual underlying content of the report is the same as previously. So nothing's come out. It just looks and feels a little bit different. So if I can ask members to turn to page 64 One of the other changes that's happened this year is CITFA, after 7 years of the public sector standards being in existence, have looked to standardise assurance opinions between both internal and external audit, and especially across internal audit providers throughout the country. And so our opinion definitions have changed slightly. So previously we had substantial, adequate, limited and no assurance. We've adopted the CITFA guidance for 2021 as it's been released, and now there will be substantial, reasonable, limited and no assurance, and the definitions are provided for you on page 164. And for clarity, the old definitions are also provided on page 173.
I think reasonable is better than adequate.
It's good that the actual description are broadly similar, so you've got that sort of consistency and clarity. But yeah, it's all in a word. But yeah, we've adopted the standard practice, so that's going to be good. It enables the comparisons across all audit providers. We've adopted the new definitions. Page 165 gives our performance. So this is in 3 areas. So at the end of September, 63% of the audit plan was either completed up to draft report stage or was indeed work in progress. So there was just sort of 37% of the work that we've yet to start scoping, and I can go through the individual sort of progress on the reviews later on. It also provides our customer satisfaction survey results, which was based upon the survey that went out to members, senior management teams, and those people that have been audited within the last 12 months. And that survey was completed back in sort of January. And we're pleased to report that the results of that survey was a sort of 98% satisfaction rating across the board. And we've also, I won't go through in any detail, but we've also updated it with our compliance with the public sector internal audit standards, but I'll go through that in a bit more detail in the next paper. Moving on to page 66 and 67, this shows where the management team are in terms of implementing the actions that were agreed off the back of all of our audit reports. And this table has changed slightly from previous progress reports, because with any overdue actions we break down now and give the summary of whether those actions were high priority, medium or low. Previously we just noted which ones were high priority, so hopefully that gives a little bit more clarity there. There are 6 areas that are highlighted and bold and denoted with an asterisk, and that indicates that all of those actions that have arisen from those reviews have been completed, so they'll drop off the next sort of progress report, but it's just there for completeness. Moving on to page 669, this confirms that there have been no limited or no assurance opinion reports issued as part of our 2021 work so far. And the remainder of the report just shows where each individual audit review is at the moment. So those reviews that either haven't started or it's scoping, audit outline agreed, through to final reports being issued. And that goes back to the sort of 63% of either up to draft report or final reports, or indeed work in progress. The only other bits to note are on page 172. We always maintain that the plan's fluid and that there will be adjustments to the plan for, as was originally sort of discussed and agreed around about November, December time last year. And so quite a few of the adjustments have been in relation to COVID. So we've brought in some specific COVID related reviews in and around health and safety, governance and decision making, gas inspections, and also some other things in and around sort of grant claims. And we're also providing some fraud awareness training to officers as well. And I think that's scheduled in to be delivered sort of during October and November. There have been 4 areas that have come out of the plan, essentially just because of timing within the organisation, that it's just not the right time to do those reviews. Again, COVID has had an impact in some of those areas, but we will be formally following up and considering those areas as part of our planning for next year. So I'll pause there, Chairman, and take any questions if there are any.
Thank you. Thank you. On your page 166, 167, which is the works and reviews, can you just run through the red ones?
I don't have the detail of what those individual actions are specifically to hand. I believe the working and partnership one from memory was around, it was, I think, to do with the economic forum thing that's there.
Okay, so if you get any further, Anthony, could you send that to me, what those are? Those
what
5
that particular action was? Certainly, yeah. Yeah, I can do that for you.
I can pass that on to the rest of the committee.
Okay, so is it just the detail of what that particular high priority action
Yes.
was?
Why are those high priorities? And that's what they are. So we can
yes, I can certainly confirm what the actions are. It's as part of our reports, the officers who identify what action is going to be taken to address any issues that have arisen as a result of our report. They specify what they believe the priority of those actions are. So, but we can give you that information for context outside of the meeting.
That's great. Thanks, Anthony. I pinched your question, Alan. There doesn't seem to be anybody else have any more questions. Any questions?
Have you not got, Alan, have you not got my name on the RTS schedule?
Not this far down, but yes, go ahead then, Martin.
If you don't mind, sorry. Only just, Alan, Anthony, sorry, just a couple of pedantic questions. On page 169 and 170, you've got so many of these rolling work programs. Where you've got 3 ticks for scoping, audit, or outline and field work, you've got ticks. Can I just understand why you don't have the draft report date? Is there a constant challenge here, or just educate me if you'd be so kind?
The draft report dates are included where the draft reports have been issued. So if you have a look at page 169,
sorry, is that draft report? Are they not expected or planned dates for completing your report? Sorry, this is what I just need to be educated about.
No, that indicates when the draft report's been issued.
Oh, okay, sorry. Okay, well, that explains that then. And then just on page 172, you talk about fraud awareness training, and you talk about risks of fraud with procurement cards. Can I, again, just educate me? I imagine those are really just the things that most of us got, debit cards or something like that. Is that what you're talking about? I'm not familiar with a card called a procurement card. Sorry.
Yeah, the procurement cards are cards that the council will use to undertake some sort of ad hoc and generally sort of low-level value purchases. There are risks with.
There are staff utilising those cards.
They are, so it's proactive fraud training, so to outline what the risks of those procurement cards usage can be.
You're relating the whole point to our staff utilising these cards. Okay.
Yes.
Okay, thank you very much. Thank you.
Thank you. No other questions?
Just me, actually.
Can we use the RTS? No.
I think I have.
Okay, Matt.
I can see it.
Okay.
I think I have. Shall I just? It is a question regarding the current remote working from home. Is this going to be affecting the procedures, and also when you're doing the audit, would that have an effect on the audit result?
So far to date, we've been able, by and large, to complete all of our audit work remotely. The way we're being able to undertake our audit work remotely, fortunately, is through the use of technology. So, for example, we use Microsoft Teams, but it's also with Skype as well, that you can screen share. So for things where we need to see the system, underlying sort of IT systems operating in practice, we can sort of see things through screen sharing, also through sort of sharing documentation as we normally would do in the course of the audit reviews, conducting all of our interviews and sort of conversations remotely as well through using Teams and Skype. So far to date, where documentation's held electronically, that can easily be shared, so you're not needing to, physically look at invoices and those sort of things if that can be shared remotely. So we're able to take all of our work to date remotely. If there is any particular reason why we would need to visit the site, we do have the arrangements in place to do that. That would be subject to a risk assessment being agreed between ourselves and the council, but to date we've not needed to do that. We've been able to complete all of the work remotely. It's working very well. It create some efficiencies because we're not traveling. It cuts down on a lot of time. It's not without its challenges as well. I wouldn't want to carry on like this indefinitely, but certainly had we been in this position, say 5 years ago, it would have been impossible to complete the work because the technology just wouldn't have been there to enable it. But it's worked out really well so far.
Okay. Thank you. Yeah.
Okay. Thank you, Anthony. Is everybody okay? Happy to do recommendations to note that? Okay.
Agreed.
In which case, can we? Do you like to carry on, Anthony, and do the next item?
Thank you, Chairman. So this paper, it's not actually our paper, it's the Institute of Internal Audit's paper. We're required to be externally and independently assessed at least every 5 years as part of the public sector internal audit standards. We were assessed previously in 2015 by the Institute of Internal Auditors, the IA, and we wanted them to come back in and do the assessment again for us, which was completed during sort of September of this year. Now, it's a requirement under the standards to assess us against the International Professional Practices Framework, the Public Sector Internal Audit Standards, the Local Government Application Note, and a few other bits and bobs as well. We are pleased to report that the IA concluded that we are fully compliant with all elements of the standards, we're fully compliant with all of the mandatory elements, and we're fully compliant with all of the recommended elements as well. So on that basis, there were no formal recommendations for improvement as part of the IIA's assessment of ourselves. There were 3 areas, which is shown on page 180, where they concluded we were excellent, which was in our reflection of the standards, our focus on performance, risk and added value, and also our quality assessment and improvement, quality assurance and improvement program. And there were 2 areas where they concluded we were good, which was operating with efficiency and coordinating and maximising our assurance. There are 64 fundamental principles which are mandatory. As I say, we're compliant with all of those, and 118 points of recommended practice. Again, we conform with all of those, and also the local government application note and the precise elements. Now, the IIA did identify some areas for improvement, a lot of which we'd already identified and were working on, but as a result of their work, we have formulated an action plan to address the areas that they felt we could improve. But again, they weren't formal recommendations. It was just their added value that we've taken on board to try and improve things all round. Now, I would like to pass on my thanks to yourself, Chairman, because I understand you were interviewed as part of this process, and also the Chief Exec, Bob Jackson, was also interviewed as well. I understand a number of surveys were also sent out to a sample of members, to anyone who took part in that. Thanks to everyone who contributed towards the assessment. We're really pleased with the outcome. It shows we're developing as a service, and we certainly haven't gone backwards from our last assessment. And this has just been reflected as part of the progress report as well. Will form part of the annual opinions, because this is one of our performance measures, is obviously compliance with what we need to comply with. So not going to mention anything else particularly about this. I just thought it was really an excellent report. We were really pleased with the outcome, and we wanted to share it with members accordingly.
Thank you, Andy. Yes, I mean, it's a very good report, and you must be very pleased to have that. Yeah, and it wasn't too daunting, the interviews, when I had them. So.
That's good. That's good.
Martin, you got a question?
Yeah, just two questions, just quickly. Just on the page 189 of the report, interviews, the report says we sent out stakeholder surveys to 38 senior managers and audit committee members, but we've only received 50% of them back. Has that improved in the time since this was published, or is it still a real problem?
No, I don't think it's a problem at all. They were very pleased with the level of responses.
They were pleased with 50% response?
Yeah, that's quite high for this sort of type of surveys. Bear in mind as well that that was supplemented by the direct interviews with 20 stakeholders, and the surveys were sent to people that didn't respond to our own survey that we sent out back in January. So they used the results of our surveys, contacted the 38 people that either weren't being directly interviewed or hadn't responded to our January survey. So it gives an absolute really good comprehensive sort of coverage when you compare the two.
Okay. And just as an aside, just for my personal education, so you're telling us in this report that the Havant Borough Council and the East Hampshire District Council have merged now. Is that fulsome, or is that just the chief executive?
No, they haven't merged. They've shared a senior management team for... we've been working with them for about 7 years, and there were joint arrangements in place then. So I couldn't tell you exactly when they
okay, so it's
shared their senior management team.
That's entirely for my personal education. Thank you very much.
No problem.
Matt, you have a question?
Yes, actually, my point is related to page 185, annual audit metrics, that would be. Just to elaborate on the core results.
Sorry, you're not coming through very clearly at the moment.
Page 185.
Yes.
Internal audit maturity metric. I don't understand that very well, but I can see there's a bit of comment about the core performance.
Sorry, can you repeat the question again, Councillor? I really didn't hear.
Can everybody else please make sure they're muted, please?
Yeah, I can hear lots of noise in the background. I'll try again. Sorry.
Thank you.
I'm talking about page 185.
Yes.
This is the internal audit maturity metrics. Could you comment on the assessment on the part of the poor part of it, the last row?
Right. This is the IIA's maturity matrix. It's not ourselves, so it's their categorizations. But there were no areas where we were poor, needed improvement, or satisfactory. In 3 of the areas that are shown in grey, we were excellent, and in 2 of the areas we were good. And that's their definition on what the difference between those are. But yeah, we weren't assessed as poor, needs improvement, or satisfactory on any of the areas. There were the 2 areas where we were good, and the 3 areas where they deemed we were excellent, in line with their assessment of ourselves against this matrix.
Sorry, I'm just a bit, I quite understand, when it says on the old standards, poor, no reference to IIA standards with significant level of non-conformance. What does that mean? You got a table in front of you.
Well, that would mean that if we fell into that category, our operating model, all of our policies and procedures and how we approach things, that we would have none of our operation, none of our setup would reflect the mandatory international professional practice framework or any of the public sector standards. However, their assessment of us as a provider was that we were excellent in that categorisation. So there's outstanding reflection of the International Institute of Internal Audit standards in terms of how we apply them logically and in spirit as well. So in everything we do, we conform in all areas, and our assessment of ourselves was excellent. So, you know, we'd rather be excellent than...
Now I can understand the table better now, as you explained it now. I was a bit sort of misunderstood the table. Thank you.
Okay.
Thank you.
Right. There doesn't seem to be any more questions, so thank you very much, Anthony. Thank you very much for that report. And excellent.
Thank you, Chairman. Thank you, members.
Thank you.
We now move on to Treasury Management, mid-year monitoring report. Rob and Gemma, would you like to introduce your report?
Good morning, Chairman. Thank you very much. Yeah. So, thank you to the committee. Let's get this to turn on. There we go. So yes, thank you to the committee for giving me the opportunity to come here today to talk to you about the mid-year Treasury Management position. So just as a reminder, as an introduction, the Council obviously sets the Treasury strategy and retains that overall responsibility for Treasury Management. My team then works with Alan and carries out Treasury activity on your behalf. Section 3 of the report, the external context, you'll all be very aware of the macroeconomic position we're in at the moment. So historically very low interest rates set by the Bank of England in March in response to the coronavirus pandemic. There's been a large-scale quantitative easing program alongside that to support financial markets. Significant impact on GDP, large sections of the economy closed down during the lockdown. Government has been spending a lot to try to support the economy, furlough, eat out to help out, those sorts of policies. Continued uncertainty around Brexit and now the second wave that we seem to be having as well of the virus. So from a Treasury Management perspective, it's been quite a challenging year to date. We take advice from Arlen Close on suitable counterparties, that the counterparty list has been reduced, so fewer people we can invest with. Interest rates have been falling across the board. Pooled fund values and returns continue to be under pressure. And so I was thinking today I'll probably therefore focus on the investment activity section of the report at section 6. So if we move on to that section of the report, so section paragraph 6.1. So the balance is about £12.7 million higher than at the same time last year. The council is, though, holding around £15 million of government funds relating to the pandemic that are due to be returned shortly. So the balance is slightly lower than this time last year once you remove that. Similarly with table 4, so short-term balances are higher than at year end. About half of that is the COVID money I've just talked about. And then the other half is due to the investment balance typically being higher at this time of year. So one of the main reasons for that is the timing of council tax receipts. The higher balance is largely being held in money market funds, which is to help to mitigate risk and also loans with other local authorities. And the council's also made use of the Treasury's debt management account deposit facility too. So that's one of the most secure options available to the council as it's lending to the UK government. 6.10 notes that particular account is now paying negative interest rates for overnight and short-term deposits. So even though the bank rate is still at 0.1% and positive, we are seeing markets are pricing in the opportunity for, or the chance that rates may fall further. And there are some negative rates creeping in across the market. 6.11 highlights that money market funds have also fallen significantly, their returns, sorry. Many now paying 0.01%, whereas this time last year we may have got 0.7%, so quite a stark difference. Table 5 is the internal investment return benchmarking at the end of June. I do now have some more up-to-date data, so to pick out a couple of the highlights at the 30th of September. So average returns are lower still than at the end of June, 0.31%, which is slightly better than the average for Arlen Close clients in this benchmarking. Still achieving an average credit rating of AA-, which is a strong rating, and that's important because we do have to prioritise the security of the investments ahead of the investment return. Bail-in risk is now slightly better at 68%. That's because more has now been invested with other local authorities who obviously aren't subject to that bail-in risk, and the weighted average maturity of investments is broadly the same. I'll now talk a little bit about the Council's investments in pooled funds, which is paragraph 6.18 onwards. You'll probably recall in the outturn report there's been a significant impact on the value of these investments due to the pandemic. Capital values have improved a little since then, so this is table 6, but the overall value is still lower than the amount that was originally invested. The pandemic has then had an impact on the investment income from these funds as well. So where you're invested in a property fund, those funds have obviously been trying to continue to collect their property rents. Equity funds are dependent on the dividends being paid by the companies within those funds. And then, of course, on the broader portfolio, there's the impact of lower interest rates generally. Alan may already have spoken about this earlier in the meeting, but this has been impacted in this impact has been reflected in the emergency budget the Council approved in September. And we've also spoken to Arlen Close about the continued investment in these pooled funds, and they do continue to recommend these as being appropriate to the Council. They were bought with the knowledge in the first instance that they were long-term investments, and the value could fall in the short term, but Arlen Close believe they should recover in value over time. And income returns do continue to be significantly greater than could be achieved from cash investments, and that helps to support the revenue budget.
These are not short-term. These pooled things are not short-term anyway, are they?
No. They do need to be seen as long-term investments. So, thank you. I'll leave it there, but obviously very happy to take any questions you may have. Thank you.
Martin?
Thank you, Alan. Just a couple of questions, Rob. Alan Bethune may want to discuss it. The first question is, hold on, sorry, I'm turning emojis at pages and things. On page 203 of our papers, your paragraph 7, or table 7. My question is, you talk in the paragraph about the investment on land at Crow Lane. Okay, so my question is why is not shown in the table 7 when Meeting House Lane is shown, with no growth. I just think it's important to show all investments, even if the asset is just being held for the future.
As these are non-treasury investments, Alan, are you happy to deal with that one?
Yeah, I just comment on that. At this present moment in time, the land at Crow Lane does not meet the criteria of an investment property, so it's not included on that table, hence why it's only noted as opposed to being included. Meeting House Lane, although there's no return, it does meet the criteria, so that's why it's on there.
Okay, well, that's not enormously entertaining answer. Anyway, and the second point is paragraph 4.3, again for you, Alan, I think probably. I dare say the press have given up listening to this meeting, but I'm just thinking when I'm meeting residents in Bransgore and they're challenging me about things, and they'll ask me about what the government's done for us and what have you. We have this 9 to 15 million which we've got to repay. We haven't spent it all. Can I just give what can I use in the public domain as to how much Boris's government have invested in our district?
Well, that particular element, so the 15 million that we hold, I mean, I think you'll probably recall there was a fairly detailed report went through the last corporate overview and scrutiny panel, which summarised in quite a lot of detail the amounts of business support grants that this council had received and paid out. Yeah. So that's probably a best port of call. I'm also due to do another financial update.
We can use as councillors.
That's in the public domain, yep, so that's absolutely fine. I'm also due to do another financial report to that panel in November. So as part of that report, I'm intending to again summarise the financial support that we've received from the government.
Okay, all right, thank you.
Right, thank you, Martin. Hilary?
Hi, yeah, mine was around the 15 million. I just wondered what that 15 million grant was for and why we haven't used it.
Okay, again, yeah, the detail would have been included in that corporate overview panel report, but in a nutshell, we received just over 57 million when these business support grants were announced. Yeah. Obviously, the government wanted to pay out that money to local authorities as soon as they could. So they used the information available to them in terms of the number of small businesses and basically properties within the district area. Now, for us in the New Forest, that included around 900 beach huts, for example. So £10,000, 900 beach huts, that was £9 million straight away that we were never going to pay out because those properties weren't eligible. The other 6 million, again, with some businesses not eligible because of state aid reasons. Some businesses just simply haven't decided to apply for the funds. So there's just a general residual balance as well that, again, will need to be returned.
Okay, so it was purely from that business grant?
It's purely the business grants fund, yes. Yeah.
Okay, thank you.
Okay. Thank you, Rob, for the updates on that. Sort of got sidetracked there a little bit, I think. But so for members, the recommendation is to consider the performance of the Treasury functions detailed in this report. Are you all happy to receive that report as is?
Agree.
Yes, agreed.
Right, thank you. Thank you very much, Rob.
Thank you.
For the update. Where are we? We're on item 10. We're doing well here. James.
Good morning, Chair. Good morning, members.
Morning.
Good morning.
Right. Thank you for the opportunity today for me to provide an update on the insurance arrangements for 2020-2023. Start off by saying 10 borough district councils work collaboratively to maximise its buying power in seeking insurance terms from the market. This was successful for the group in achieving savings. Prior to the new contract, the cost of insurance amongst the group was 4 million. If I can explain the procurement exercise that was involved, Fareham Borough Council led the procurement process on behalf of all HIF members using an e-tendering portal. The HIF appointed a subgroup to assist in the procurement exercise. The HIF group mitigated the risks to the procurement by ensuring the listed points in 3.3 were used and delivered. To make the risk attractive to the market, the tender was split into 8 lots. Quotations were rated on a 60-40 basis, meaning 60% was for the price, 40 was for the quality. 9 tenders received for a 3-year contract with options to extend. Fareham Borough Council facilitated the award. All members accepted a 3-year contract with the option to extend, which commenced from the 1st of April 2020. Savings across the HIF were delivered at 891,000. New Forest saving was 23,000. To ensure ongoing savings, these arrangements will be monitored. Okay, so that covers off the procurement. If I can just move on to the cyber insurance. From the 1st of April 2020, NFDC have a cyber insurance in place with Beazley. They have a 24/7 helpline which supports the ICT department for any such event. With the ongoing risk to local authorities with cyber threats, I can safely say NFDC is in a strong position having an insurance in place. I can report no claims have been reported to date. That covers off the cyber insurance aspect there. Just to report on the financial implications, the overall premium for 2020-21 procured through the HIF is 630,327. This is a reduction of 23,000 as previously mentioned. The saving has been utilised to the cost of the cyber insurance policy. I'm happy to take any questions from any members.
Thank you, James. That's good news to actually have the reduction in insurance costs, which only goes to prove that doing this tendering as a group is far better than trying to go through individually.
Indeed.
I couldn't agree more.
Indeed.
Yeah. Alan, you got a question?
Yeah, I think Martin was first, but quickly my question is that, the saving that we get, NFDC get, is very good and very welcome, but in percentage terms, it's a lot less than everybody else in the consortium. I just wondered why that was.
It is quite a complex one to answer, only because the risks, amongst other local authorities, would be in a different position, meaning that they would have started off from a worse place compared to Forest, which means they would have got a better saving. So it is hard to fully drill down to specifics, but as the chairman highlighted, it is far better to be inclusive than outside of that. And also the award basis is that we would go as a group, but not be individually cherry pick the actual bidders to suit an individual council. So on the plus side of going collaboratively, there are going to be winners and losers. So there are pros and cons to that approach.
Right, thank you. Martin?
Thank you, Chairman. Just a couple of 3 or 4 questions.
Just a couple.
Yeah. So paragraph 3.2, does that seemingly indicate that we don't have an interest as officers in the work the HIF is doing?
Oh no, we do. I
thought that was the answer.
we certainly do. Unfortunately, at the time, there was a transition between roles within NFDC. I joined in September. The actual tendering exercises started from April, so due to the advertisement of my role and me joining, there wasn't anyone there really, unfortunately.
Okay, but thank you very much. The next paragraph is 310. So again, a pedantic question: do we get invoices from the various insurers, or simply a breakdown from the HIF in total?
Sorry, can you repeat the question again, please?
Sorry.
So my question is, do we get invoiced individually or as a group?
Oh, I see. Right. Okay. Yeah, we do get invoiced individually. What our broker do, they invoice each individual councils. So obviously we don't have a single joint policy amongst the group. Everyone has their own different excess levels, different indemnity limits. So that's why they are, policies are issued individually to all the 10 councils. Hence why we pay the policy premium individually as well.
Right. Okay. Thank you. Third question: how many NFDC staff do you have who can work on claims of insurance and what have you, or how does it work, sort of thing?
That would be me. I deal with all the insurance claims across all classes of business, and that means I deal directly with the insurer. I deal with the internal service managers, also deal with our drivers. So I deal with different levels within the management structure within New Forest. So there's full control over that.
Fantastic. And finally, my real concern is there's in the annual government statement there was talk about the work you were doing on a risk management report and what have you. My question really is what can you achieve outside of the HIF. Particularly as we're in a 3-year contracts arrangement, which I fully support, a wonderful decision. But what sort of risk management can you come up with, sort of thing?
Well, the benefits of us being part of the HIF, with the current insurer, Protector, who has got the main share of the business, have given unlimited risk support to all 10 district councils, and they are currently undertaking work on the risk strategy for all members. So, for example, at the moment with motor, they're currently looking at slow manoeuvring accidents and seeing what can be done to mitigate that. So they are leading with, I believe, Eastleigh at the moment, because they unfortunately got a more higher percentage of those kind of claims. And then once that review has been undertaken, it will be rolled out to other members, and that would be delivered, obviously with current circumstances, will mainly be through guidance, documentation, but also webinar platforms like Skype, everything else, and that would roll out to our drivers, service managers, and supervisors. But the benefit is that we're all working collaboratively from an insurance perspective in the HIF, but also, especially with risk management, it is such an important thing currently going forward.
Right. Okay, well, thank you very much for your perseverance with my questions.
Thank you for understanding.
Hilary.
Yeah, I just wanted to ask that would in future the cyber insurance get included within the HIF, because I presume they've all got to have that covered as well.
Well, it is down to the individual authorities to actually take on that class of insurance. The current uptake at the moment is just New Forest and Winchester. There is an aim for this to be rolled out, but it is entirely up to the individual district councils to take that on. So going forward, the cyber insurance will be included in the financial reporting, but unfortunately it wasn't in the actual tender process, which is why I haven't unfortunately given the full update in the listing that's there in the coverage.
Okay, thank you.
Right. No more questions? No? Lovely. Thank you very much, James. Thanks very much for that report.
Thank you, Chair, and thank you, elected members.
Members, happy to note that.
Agreed.
Agreed.
Right. So moving on to item 11, that's just to really, as the wording on the agenda is, can we all just note that the intention is to hold a risk management training session in due course. Item 12 is work programme. Don't think anybody have got anything that needs to add to that. It's obviously getting nearer the end of the year for this, and then we'll have a new work programme afterwards. Item 13 is dates of the meetings. And last but not least, any other business. Does anybody have any other business? No? Well, thank you very much, everybody, for attending this meeting. I'll declare this meeting closed.